Hello friends, welcome back to my channel Quest for Knowledge. Today we are going to go through with economics all fill-ups. Do you know this time the model paper, with the help of model paper and with the preparatory exam paper, we have come to know that the paper pattern is completely changed. Now we are going to have 10 MCQs, 5 fill-up, 5 match-up, and we are not going to have the one-word question and answer, which carries 20 marks. So all the 1 mark itself is going to carry 20 marks. It is very important even for the toppers and even for the passing package. These keeps every answer counts. So if you refer this fill up, it means you have completely gone through with all the chapter fill ups, along with that all the model papers and previous year papers fill ups, so that if you refer this, there is no need to refer any other material after referring to this. And after completing this fill ups or completing this video, I hope and expect that you will be well prepared for fill-ups to the annual exam for 100% assurity that I give you for this. Okay, so let's get started with all the fill-ups. First question is, scarcity of resources give rise to problem of choice. Second, in a centrally planned economy, all government decisions are made by government. In reality, all economies are mixed. One satisfying capacity of a commodity is called utility. Two indifference curves never intersect each other. As income increases, the demand curve for normal goods shift toward rightward. It means it also increases. The demand for a good moves in the opposite direction, because whenever the price is high, demand will be low, and whenever the price is low, the demand will be high, because the price and demand always go in a opposite direction. Method of adding two individual demand is called as horizontal summation. An equation x and y is equals to c is give us rectangular hyperbola. In the long run, all inputs are variable. Average product is defined as the output per unit of variable input. Marginal product and average product curves are inverse U in shape. SMC curve cuts the AVC curve at the minimum below point of AVC curve from SMC curve cut the AVC curve at the minimum point, okay, to the from SMC curve. Okay, the AVC curve cuts SMC curve cuts to the minimum of AVC curve is called as shutdown point. Isocont is the set of all possible combination of the two input that gives same level of output. Iso means same, quant means quantity. So the possible combination of two inputs produces the same level of output. Price taking behavior is the single most distinguishing character of perfect competition, because they are the price takers. Monopoly is the price maker. Unit tax is the tax that the government imposes per unit of sale of output. For a price taking firm, marginal revenue is equal to market price. The point of minimum AVC where SMC curves cut the AVC curve is called shutdown point. Opportunity cost of some activity is the gain foregone or the sacrifice done for the opportunity cost is the next best alternative foregone. In a perfectly competitive market, equilibrium occurs when market demand is equal to market supply. If the supply curve shift rightward and demand curve shift leftward, equilibrium price will decrease. Wage rate is determined at the point where demand for labor and supply of labor intersect with each other. In labor market, household are the suppliers of labor. Due to rightward shift in both demand and supply curve, the equilibrium price remains same. It is assumed that in a perfectly competitive market, an equilibrium price is at play. The monopoly firm's decision to sell a larger quantity is possible only when they sell it in a lower price. Competitive behavior and competitive market structure are in generally inversely related, opposite related. In monopoly market, the goods which are sold have no close substitute. What are the formula for TR, that is total revenue, that is price into quantity? The revenue received by the firm per unit of commodity sold is called average revenue. With the zero production cost, when the total revenue of monopoly firm is maximum, the profit is also maximum, because here the production is zero cost. Then all the revenue is itself a profit. Macroeconomics tries to address situation facing the economy as a whole. Okay, aggregately when you discuss. A part of the revenue is paid out as for the service rendered by land is rent. A domestic country may sell the goods to the rest of the world is called export. The production units are called as firms. Macroeconomic policies are pursued by the state itself or the statutory bodies like RBI, SCBI, etc. Stocks are defined at a particular point of time. Final goods will not pass through any more stages of production or transformation is called as final goods. Depreciation is an annual allowance for wear and tear of a capital good. Inventory is a stock variable. Pollution is an example for negative externality. If you do any good like contributing to the GDP comes under a positive externality, and on the same time you're not going to get any reward for any benefit which you do, and in the similar way you're not going to be penalized or punished for any of the harm you do. So any of the harm you do but you're not penalized, that comes under negative externality. Any of the benefit you do to which you're not getting rewarded, that come under positive externality. The net contribution made by a firm is called value added. Economic exchanges without the use of money is called as barter exchanges. Reserve Bank is the only institution which can issue currency in India, so that the coins are being issued by the government of India. Okay. The principal motive for holding money is to carry out transactions, for exchanges, for understanding the value, measure of value, holding of wealth. So the main motive is to exchange, okay, so that the buying and selling transaction can be done. M1 and M2 are known as narrow money. M3 and M4 are known as broad money. CY shows the dependence of consumption on income, because CY is a induced consumption. C bar, which is C bar, is a autonomous consumption which is not dependent on income. CY is a consumption which is dependent to income. As income increases, consumption also increases. Saving is the part of income that is not spended or consumed. Average propensity to consume is the consumption with per unit of income. Investment is defined as addition to the stock of physical capital. Size of the multiplier depends on the value of marginal propensity to consume, that is MPC, additional propensity to consume. So with the help of that, it's depend on the size of the multiplier. Y bar is a positive constant which represent autonomous investment in the economy. Okay, non-paying users of public goods are known as free riders in India. This is important. Financial year runs from 1st of April to 31st of March. Taxes imposed on goods imported into and exported out of India are called custom duty. The government may spend an amount equal to the revenue it collects is called as balanced budget. Revenue deficit is when revenue expenditure is greater than the revenue receipt. Current account is the record of trade in goods and services and transfer payments. Capital account records all international and capital transactions of assets. The price of foreign currency in terms of domestic currency has increased, and this is called appreciation of domestic currency. Managed floating is a mixture of flexible and fixed exchange rate system. The Bretton Woods Conference held in the year 1994, actually it's 1944. That is it for today. If you found this video helpful, do like, share and subscribe, and comment your suggestions below. And also please support to my channel, because 90% of the people who watch my videos are unsubscribers, and that is the reason. Please support to my channel, and thank you so much for watching.